Before every major breakout or crash, the MACD gives a warning. It's not the crossover, it's something else. Look at this chart. Price is making higher highs. You're 100% sure it'll go even higher because the MACD just turned green again, but what you don't see is the silent killer hiding beneath the chart. The MACD line is forming lower highs while price keeps climbing. That's the divergence, the snake waiting to strike your stop loss. If you master this one concept, you'll stop being trapped by fake breakouts and start catching the real reversals before everyone else. Now, what exactly is divergence? It's when price moves in one direction, but momentum secretly moves in the opposite. The MACD is built to measure momentum, and when the MACD and price movement disagree, that's your early warning sign. Let's start with the most common one, regular divergence. When price makes a higher high but MACD makes a lower high, that's a regular bearish divergence. It usually means the bullish momentum is fading and a reversal to the downside might be coming soon. See how the histogram also starts shrinking here. That's your second clue that buyers are losing steam. Now flip it. When price makes a lower low but MACD forms a higher low, that's a regular bullish divergence. Momentum is increasing even though price still looks weak. It's a sign that sellers are getting exhausted and a bullish reversal could be close. For example, imagine Bitcoin drops below its previous low, but the MACD curve turns upward instead of continuing down. That's your bullish divergence. Price might look weak, but under the surface, momentum is shifting. That's where I look for confirmation, a break above the last swing high or a strong green candle. That's my cue to go long. Now let's talk about something even more powerful, hidden divergence. This one doesn't signal reversal, it signals trend continuation. In an uptrend, if price forms a higher low, but the MACD forms a lower low, that's a hidden bullish divergence. It means the trend took a breath, gathered more strength, and is ready to continue moving up. Same idea in a downtrend. If price forms a lower high but the MACD forms a higher high, that's hidden bearish divergence. Momentum reset, but the downtrend isn't done yet. It's a great signal to continue riding the existing trend. In Forex, this works beautifully on Euro/USD and all other pairs. In crypto, try Bitcoin or Ethereum on 4-hour or daily charts. You'll see how many strong continuations start with a hidden divergence pattern. Now, here's where most traders go wrong. They think every mismatch between price and MACD is divergence, but not every dip or rise counts. You need clear swing points. If the market is choppy, ranging, or sideways, ignore it. Divergence is only meaningful when the market is trending and forming real highs and lows. Time frame matters too. A divergence on a 5-minute chart might give you a 20-minute move. A divergence on a daily chart can trigger a trend lasting weeks. So match your analysis to your trading style. Short-term traders can use 15-minute or 1-hour charts, while swing traders should watch the 4-hour and daily charts. Now let's talk about confirmation, because divergence by itself is just a signal, not an entry. Once you spot divergence, wait for price confirmation. For bearish setups, when price makes a higher high but MACD shows a lower high, wait for a break below the recent swing low. That's your entry trigger. Place your stop loss above the last high. For bullish setups, when price makes a lower low but MACD shows a higher low, wait for a break above the last swing high. That's your entry signal. Stop goes just below the previous low. Keep it clean and rule-based. No guessing games. Here's a simple but powerful pro tip I use. When I see divergence forming, I don't enter immediately. I wait for the MACD 0 line crossover in the same direction. That extra patience filters out tons of fake signals. If it's a bullish divergence, I wait for the MACD line to cross above 0. If it's bearish, I wait for it to drop below 0. That shows the shift in momentum is real, not temporary. Another great confirmation layer, combine divergence with support and resistance or trend lines. If you see divergence exactly where price hits a key level, that's your confluence. For example, price touches a major resistance, forms a higher high, but MACD forms a lower high. That's a powerful short setup. It's not just momentum weakening, it's also structure confirming it. The same logic works for demand zones. Price forms a lower low into strong support, but MACD prints a higher low. That's your bullish confluence. Momentum and price are both hinting the same direction. You can even mark divergent setups directly on TradingView. Draw lines connecting highs and lows on both price and MACD. Once you see that disagreement clearly, you'll start noticing how many major reversals begin right there. Here's one more advanced tip. Watch the histogram shape. When divergence appears and the histogram starts shrinking towards zero, it means momentum is fading. If that happens near a strong level, the move is usually close to reversing. So remember, regular divergence equals possible reversal. Hidden divergence equals likely continuation. Confirm with structure, respect the trend, and never trade divergence in isolation. I've seen traders base entire systems on this one concept. They don't chase every crossover or indicator signal. They just wait for clear divergence, combine it with price action, and take high probability trades with tight risk. Next time you see everyone calling for a breakout, look down at your MACD. If it's not agreeing with the price, maybe the real move is about to go the opposite way. And that's how you get ahead of the crowd, by reading what momentum is whispering before price even shows it. If you found this tutorial helpful, make sure to subscribe to the channel and turn on notifications, because I'll be sharing more advanced TradingView strategies, complete trading setups, and real chart breakdowns every week. This video is for educational purposes only. I'm not a financial advisor. TradingView.com charts used to make this video. Please do your own research before making any decisions.